I think we'll see quite a few people shift away from. God, I feel like every cycle we say this, but like surely people will now start building apps.
Today's show is powered by SKALE. We'll hear more about them later, but first, let's dive into today's episode. Hey guys, before we get into the episode, I want to talk about DAS, Digital Asset Summit 2025, crypto's premier institutional conference, returning to New York City next month. We're expecting this year's DAS to be the best yet, with speakers spanning across major allocators, asset managers, financial institutions, and of course, crypto native teams. These include familiar names like Michael Saylor of Strategy, Kathy Wood of ARK Invest, and Solana's Anatoly Yakovenko, among a long list of other incredible speakers. In addition to hearing from and networking with prominent individuals from around the industry, there will also be several live podcasts, for example, from our friends at the 1000X and Lightspeed pods. And our very own Ryan Cashflows Connor will be speaking alongside Hadley Stern from Marinade to discuss the state of the Solana validator ecosystem. Use code 0x10 to get 10% off tickets at the link in the show notes. We hope to see you there. Now let's jump into today's show.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
What's up, guys? Welcome back to another episode of OX Research. Today, we finally have our boy Boccaccio back on the round table. Great to have him back. I'm also joined by Darren Mims and Mark Arjun from the research and advisory teams. How are you guys doing? Bach, how are you doing? How's it feel to be back in the round table seat?
It feels okay. No, I'm kidding. It feels great, man. It's fantastic to be able to talk to you guys. I haven't done these in a while though, so I don't really know how conversations go now. I mainly do the interview style ones. So it might be a bit awkward. FYI.
That's all right. We can pretend it's like a half interview.
Okay.
Darren, Mark, and Bach as well. I guess I'll throw it to all of you. How do we feel about the markets generally right now? It's been maybe a rough couple of weeks. Just a lot of volatility. You know, things are. I think people are struggling if they're holding a lot of alts right now. What are you guys' thoughts?
I'm down tremendously.
Yeah, fair. I think it's like on BTC there's no volatility, and it's like very boring between this range of we tag 90K every once in a while, but it's mostly like 95 to 106 or not 106, like 102 or something. And it makes people lose their minds, bro. There's also nothing like I was actually talking to our producer today, and I was like, who the fuck am I gonna have on the show as a guest? And the reality is that it's like because you want stuff that's relevant, but no one's talking about really anything. Like I can't have on Stool Presidente to talk about, hey man, what is Jail Stool doing? um, so it's like on that side it's tough. On the other side, like on the research side, I feel like it's actually been quite good. Like we have a lot of new chains launching, and whatever you want to say about like how they launch, and we can talk about that a bit later. I assume it's in your notes, but um that's like there's stuff over there. I just nothing is going up. So Twitter's a cesspool. Group chats are just like hating on stuff constantly. Um, I don't know. We'll see. I think like a few more months of chop and everybody gives up anyway. So we'll see.
Yeah, it's definitely been a rough few weeks. I mean, Bitcoin is muted relative, but I mean, like just a few weeks before that, Solana hit all-time highs. President Trump launched a meme coin. It felt like a new paradigm almost, and maybe that was a signal in of itself. Low-key Millennium might have actually just done it all way for everybody, but I don't know. It feels choppy. I'm trying to embrace the choppy trading instead of the momentum now. We'll see how that goes. I think it's also pretty pessimistic on like the perps exchanges, like Hyperliquid, which normally has the highest funding rates, has negative funding rates for Solana, which is like two things I'm surprised. Like one, Hyperliquid has negative funding rates, and two, it's Solana as well. So it's just crazy how quickly sentiment can just flip in this space.
Yeah, it definitely seems like the sentiment changes have like accelerated. Maybe that's maybe you blame Trump, maybe you blame Melania token, whatever. I think if we look back a year, it feels very similar to like the summer of 2024 sentiment. Even though a lot of things topped like you said, in the past few weeks, whereas in that case, it was, months of going sideways to get people to start thinking about, giving up, giving in, whatever, those types of vibes on the timeline. So
I also think it's been kind of different because we talked about this today as well, but like the summer chop was 65 to 50K. And you could reasonably say, like, okay, I think there's only like a 3% chance that BTC has stopped. I believe that we're going to go higher, but now, like, we hit 110K. Trump launched a meme coin. What are the, like, what would you say are the actual odds that we topped? And it's not 10%. It's not like, it's a bit higher than that. And there's like this creeping fear into people. I think like that's why the chop is really, really affecting a lot of people. Is like, because you may have held down all of your alts. Like, a lot of people already lost money, 60-70% on some of these like meme coins, recent ones as well. So I think that's also why people are losing their minds.
I think it serves up a good question that I've seen getting a lot of discussion lately as well, is like this idea of whether or not Bitcoin might be entering sort of like its own kind of market regime, and the rest of alts basically are continuing along with periods of high speculation and losing that activity. I guess maybe relevant, or like jumping off of that conversation around, like, if you the odds around a top, maybe the bigger question there is like, do you guys believe in that hypothesis that like Bitcoin is on it's like eclipsed some crypto market cycle narrative, and now kind of has its own kind of market structure and regime set up just because of how large or the types of players that are involved?
I'm gonna say one thing. We're just having the super cycle conversation again. And not in the way that's like, oh, like Suzu was early, but more like every cycle something happens that we start believing in the super cycle. And like, it's just that I don't know, like, obviously there's more chance for it to be actually like a new asset, like for it to be like a very legitimate asset. On the other hand, we are literally just having the super cycle conversation that we said we wouldn't have at the end of last cycle. During the bear, everybody was like, I'm never falling for it again, bro. And then now everybody's falling for it again. um on the other hand, I do think that there is a chance that we don't get that. Like, what was the drawdown last cycle? 69K to bottom was 14 or 15, right? Whatever that is. Let's say it's 80%. I think we probably get like 50, 60 max. I don't really see it going 80% again. Could be wrong.
I think even 60% might be too high. I mean, super cycle, that really means all the coins, right? But if we're just specifically talking about Bitcoin, we're looking at the last year. If we look at previous years, just from a volatility perspective, right? Like Bitcoin's volatility has been severely reduced in 2024 and even the beginning of 2025 relative to all the other years. And we have a structural buyer now in the sense of ETFs and specifically BlackRock. Like, it's a structural buyer, and then maybe a mini structural buyer from Michael Saylor, because he just seems to keep doing this every quarter. But if you look at it, if you look at how much of net flows into the ETFs on a monthly basis, it's multiple times more than the Bitcoin that's being emitted from miners.
Yeah.
Right. So it's kind of like taking away that downside volatility in a sense, and that mining pressure, because back in the day when prices went down, miners are forced to sell. They're making less profit margins. You need to stay afloat. Right, have to take debt, futures. Both of those things cost extra capital as well. And so now with this structural buyer, we kind of absorb these flows more naturally in a consistent basis over the long term, and it's a little bit better for both the miners and the sell side pressure from that point of view. I don't know if I want to feel into the copium, but I don't think that this is Bitcoin's top. I think, like, if you look at international like surveys, 2023, I think it was 8% of large institutions were saying they were considering or have already invested in crypto. Now, as of I think it was late December last year, it's 13%. So yeah, 8 to 13% is not that. I mean, in relative terms, that's about 40% jump. 40% more of these investors are open to it, but it's still a small amount of people who are even considering putting this asset into their portfolios. And I think a lot more education needs to happen. I think a lot more, documents need to be signed through CIO investments and getting this through the credit committees and whatnot. So I think it's a longer process, but with these positive regulations going on in the US, which tends to be the biggest domino to fall for other countries around the world in terms of like the financialization or accepting things as an asset class, I think like there's some smaller structural tailwinds behind us. So I mean ahead of us. So yeah.
I'm gonna say one thing. I don't think we've topped as well. I just think it's a higher chance. So I don't want anybody to think that I'm like being very, very bearish. I have reduced exposure, but I don't think like the macro top is in whatever that may be.
This episode is sponsored by SKALE. SKALE has differentiated itself from other layer 1s by offering users a network of gas-free, interoperable EVML1s where the user experience comes first. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at SKALE Network. To learn more about the gas-free architecture and growth of the SKALE ecosystem, visit the SKALE Research Hub at scale.space/research. This episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your crypto and logins, trusted by 7 million users and securing 20% of the world's digital assets. Follow the link in today's show notes to grab your Ledger now.
Mark, you mentioned the Sailor buys as like a mini structural. Don't those worry you a little bit? He has like 42 bill in exposure. He bought 20 bill in Q4. Like he's clearly very aggressively buying in. He did the same last cycle top, and also he's clearly like walking price up. So are even ETF flows that good? I mean, we kind of touched up on them, but like I don't know. I'm just saying, like, I'm a bit skeptical about this 50-60% drawdown thing. That's it.
Yeah, and what Sailor's doing with this financial games with the leverage and even the new preferred stocks that are coming out, I never like when you add that kind of risk to buys and then you have it on debt and all of this kind of stuff and you're increasing the number of shares. Not something that I sit too comfortably with. I mean, it's obviously been working, especially I think it's more of a marketing ploy from Sailor more so than anything else. I mean, obviously if you look at his average cost price, it's done well for the company from a profit perspective, but it's more so from a marketing perspective. I mean, it trades at a ridiculous premium to NAV. But I mean, ETF flows are good. Like January, even though we felt like this, and from the February 3rd tariff announcement, like January, Bitcoin was up 9%. It's had one of its better Januaries historically speaking, and ETF flows had their 4th highest month ever. So I'm, those are, the ETF flows I'm a little bit more comfortable with, and I historically speaking, the second year of an ETF, of a successful ETF, outperforms the first year. So I'm expecting that this year. I think last year was maybe 56 billion. I could be getting this number wrong in net inflows. This year, I'm thinking maybe it's going to be like 60 something, not like not a double amount more, just a creep up of the amount more as more investors get comfortable. But for Sailor, I hope it works out, obviously, because that would be some really bad sell pressure if something goes wrong. I saw that Ethereum is copying it as ETH strategy now, and it's on chain.
Wait, that actually got canceled. That
Well, one of them, right?
Yeah, they're doing reimbursements now for the folks that sent their ETH, but yeah, Ether strategy. Yeah.
Dude, it took them 3 weeks. Sorry, finish up, Mark.
No, I was going to say, I saw one of them got canceled, but I think the other one that was, I would say, no offense to the one that got canceled, but the one I would say is a little bit more legitimate that didn't have a launch date yet. That one is still on the books for launching. I think, I can't remember who put out a post in it, but yeah, anyway.
Did you guys hear about Hyperliquid strategy where the team bids hype with protocol fees and it's 670 mil annualized? It's very interesting stuff. I recommend everybody checks it out.
Of course, Box slips Hyperliquid into a conversation somehow.
I have to, man.
There's 670 million annualized. That's a little.
What? You don't like it?
I mean, I was gonna ask how that number came about. That's all.
Well, I did the math. It's based on past month's buys.
So we go. I guess if we go sideways for 6 months, the past month buys, they might trend down a little bit. But there's probably some other strategies in terms of token buy, like Radium might be another one that people could take a look at as well. I think there's a lot of tokens during this kind of market period that maybe you look away from the fully attention based things and into the things with real revenues with cash flows. Unfortunately we don't have cash flows Connor on to espouse this whole thesis there, but cash flows are meaningful. I do want to comment just on the ETF stuff though. I think the really meaningful thing there, regardless of whether or not I think the CT sentiment is like, oh, BlackRock and institutions are buying your bags, what have you. I think that's likely not true. We have like indications that this is like not quite the case. Obviously, more regulations and things are needed before the true like actual institutions and larger clients are doing that in mass. But even if it just unlocked like retirement accounts of retail who were already buying Bitcoin, like just with their cash on the side, this just unlocked more liquidity from them that they can put into the asset. And it's been meaningful. The net, Mark, you'd probably know the number better than me, but the net inflows to ETFs have been on the magnitude of like 30 billion plus, if not more. So it's been substantial. Yeah, obviously, and maybe about ETH strategy. I guess the hard part, the hurdle that you have to climb over is it's maybe a little harder to set up a financial game strategy like that when the asset price has not trended up or sideways, but down. I think it's a little bit more difficult to get that train rolling.
ETH strategy would have been like great to, I guess, launch back when like there was the whole like ultrasound narrative and so much ETH was being burned and stuff. I could see that doing particularly well then, but as of right now, I have my own skepticisms there.
How do we feel about ETH? Like, we've talked about it recently. I'm curious, like, Darren, Mark, your guys' thoughts as maybe some of our resident ETH bulls. Like, has the optimism come back? Like, are we, not to be a pun about optimism, but are we like more excited about ETH's future going forward? Like, there's been a lot of like Vitalik wartime mode, getting back certain people at the EF, like a look at like how they're running things. How do we feel now as compared to like a month ago?
I'm still reserving my judgment personally, and I say this because like we haven't really seen anything come about from like the whole EF like restructuring so far, right? Like there was supposed to be like a large announcement coming soon, and so I can't really say like if things will change tangibly. And the gas limit has been raised by like all the validators, but like if you check when that pump the gas movement started, it started back March of 2024. And so we've raised the gas like 10 million or so, maybe like we've raised the gas like very incrementally after a year. And I honestly, in reference to that specifically, I think it would be better if they flipped the switch on that and had it like reverse. Like you have to vote for like keeping the gas the same instead of voting for an increase, like make it an opt out in some way. That would be cooler, and that would be more aggressive on the growth end. In I guess there are certain like developments in the interoperability space that I'm somewhat bullish on. There seems to be this large push in the interoperability working group that the foundation has to like get interoperability working for L2s. However, I'm not sure, or well, I don't think that this is the core problem that exists today, right? I think a lot of the problems that they focus on are like kind of downstream from like the core problem, which is like scale the L1, right? Like we say like, hey, we need better, we need to get rid of the fragmentation in the L2 space, right? But the reason why that space exists mostly, or there's so much like inflow there, is because of the L1, right? That's just my take for now.
I think that's a really good shout with the way to set up increasing the gas limit, make it opt out. That's like Nudge Theory 2017 Nobel Prize winner, like Richard Thaler. I love that idea. I need to start to show that on the timeline some more. because I mean, even this was controversial. I mean, to be fair, they've had it for a year to like pump the gas or whatever, but it was really, honestly, I think it was Anthony Sasalano, I think I pronounced that right. The host of the Daily Gway. I think he was the one who had a lot of push behind it. I think he really started to push it like in December or something. And it's since he started to talk about it seriously on his pod, I think I saw the numbers go up on the gas limit website, the same pic that we just showed there. So I mean, so kudos to him for pushing that. But yeah, but I think they're also trying to make it such that the validators don't control this anymore, which I don't like. I think they want to do it like with soft forks now, like change how the gas limit is increased, and I really don't like that. I like your suggested method the best. Now that you talked about it, but then how am I feeling in terms of ETH? Like, there's been all of this talk about let's get PEDAS done faster, let's get Fusaka done faster, let's scale Bobs faster, let's scale the L1 faster, right? Okay, and then what's the next upgrade? The next upgrade, Pectra, it's got pushed back to Q2. Right, it got pushed back to April, and like after all of this talk, I mean, it's not official yet. I know the devs are going to give the actual date sometime next month after the devnets have had their test with it. But like you think you'd have a little bit more urgency to try and get this next upgrade done as quickly as possible, seeing it was already pushed back from Q4 last year. So I'm not too happy on that front. And then also I was very surprised after the tariff announcement when ETH wicked down to like 2200 US dollars. I didn't see that coming, especially like relative to BTC, which didn't wick down that much. I'm maybe like 9%, I think Bitcoin's drawdown was after that. I don't know if it's because of capitulation or if it's because that ETH is used a lot in collateral and DeFi contracts. So then when liquidations happen, it just has that cascading sell pressure effect, which might likely be the case. But then I was thinking, does that take away then from the Ethereum store value? Like narrative. I mean, a lot of people like to push that, oh, look how much ETH is used as collateral in these things. But then if so much is used and you get a liquidation event like this, and it ends up forcing sell pressure, how much of a store value is it really because of this? I mean, it's not the best one-to-one, but it is a real thing that happens. And now I'm getting less credence from that whole it's used in DeFi as collateral argument now. So overall, I've lost a little bit of faith in just terms of any timeless, any use case, any narrative. But like Darren was saying, I'm still optimistic because I know that there are things working on behind the scenes that they're going to announce. And hopefully, these things take time. Like Ethereum is a relatively large foundation, let's just call it. And these things take a little bit of time. There's a little bit of bureaucracy. It's decentralized. So I'll give it a little bit of leeway.
I will say I want to jump in and ask like to Mark really quickly here. Do you have any like I guess optimism in regards to the whole native rollup thing that the foundation was pushing more recently?
So native rollups, it's probably the best type of rollup for Ethereum to have. A base native rollup would be best. And for the listeners who aren't familiar, native rollup is basically a rollup that uses a specific pre-compile that hasn't been created yet, but this pre-compile, you can think of it as an EVM and an EVM. It's something that lets the EVM recognize its own self, let's just put it like that, such that if an L2 posts a state transaction, a state transition function, they can post the root, the post root, and then the actual like data availability, the actual data that went through it. And the Ethereum L1 can verify it like trustlessly, assuming that the L2 is fully EVM compatible. And I say fully, I exaggerate on fully because it needs to be, there can't be any differences between the opcodes between the L2 and the L1. And even though we think of like Arbitrum and Optimism as fully EVM compatible, they're mostly EVM compatible. Like some of the opcodes are slightly different. Maybe like, for instance, like they might change the burn function because burn function doesn't actually exist in an L2. It's more of an L1 thing, and they might change that to something else. They might tweak things for performance reasons, for security reasons. and they'll have these little differences, and it makes them incompatible in their current state to become a native rollup. And it really depends on how many of these L2s get behind it. But if they do get behind it, and if they do also maybe adopt some kind of base sequencing, because these types of implementations are network effects. The more people, the more L2s who join this, the more beneficial it becomes to the other L2s and the Ethereum ecosystem as a whole. Native and based rollups can get you, composability with the L1. You can tap into the L1 liquidity and TVL, and you can amortize those costs among users. Native rollups eliminates the need for security counsels. It sort of severely reduces the risks of operating an L2. They wouldn't have to manage all of these multi-sigs, which at the end of the day, if anything goes wrong, they end up devolving to anyway. So there are some advantages, but I do think there needs to be an incentive alignment. Maybe we can, I haven't thought too deeply into this, but maybe there's a way to change the blob pricing to kind of incentivize those who are becoming either based or native, giving them either more favorable fees, maybe a share in the ETH burn. Like, there needs to be some kind of incentive mechanism to get these things. I don't think saying composability or increased security is enough of an incentive. It needs to be financial and economic.
I agree with your take there 100%, Mark. I think we've seen for a long time that just like trying to be aligned for the sake of being aligned is like not enough. And we're seeing, the community is giving some backlash to like the base team for basically going out and just trying to like making the best product with what's available to them. I think like none of their choices are very surprising given who they are and like what they're trying to build and the fact that they're, essentially owned by Coinbase today. So that's not surprising. I guess like my question would be I like your point about maybe there need to be some like direct economic incentives to get people to build chains like that. Do you see like, what does the sentiment feel like around the community today? Do we see them going in that direction, or do we see this like, this is kind of the constant mantra of like, well, if you're ETH aligned, you'll just do it. Like, do we see people making a change towards a direction like that, or do you not see that happening?
I mean, from my point of view, I don't really see that happening, or like, I don't see, I guess, directly what Mark's saying in that like we offer special benefits to rollups in some sort of way. I've seen more discussion lately about like levying a tax to rollups instead, and I'm not sure how that would actually look in the long run. On and there's been some discussion about changing like the like EIP 1559 or whatever as well, and like changing how the base fee works there for rollups. So I mean, there's some work being done, but I'm not going to say that I'm like caught up to speed there.
Why do we call it a tax? It's not a tax. You're asking them to pay a fee, no? It's the same model that Optimism has where Base has to pay them a fee. It's
I mean,
big
I couldn't tell you. I'm just like
based on
repeating
messenger.
what I've like seen.
That's fair.
Are you talking for the native rollups?
I'm talking about like the like general like the rollups we have today, not like not the native rollups, something like like Optimism, etc.
So like introducing some kind of revenue share agreement like the Optimism Superchain does today.
Yeah, and I've seen like Vitalik in one of his most recent posts on scaling the L1s and the L2s talks about there needing to be a social agreement or some sort to like get like I guess value back to Ethereum the asset, but I kind of don't see that as like or I don't like the phrasing there of like a social agreement. It doesn't really seem like it would hold long term. It doesn't. I don't know. There's something off there.
Who called it a tax? I just want to understand this because this fits into this idea I have that like Ethereum people really want to LARP as central bankers all the time. So they like name stuff, funky stuff like taxes. Was it an ETH guy? Or
I
was
think
it
it was someone from like the Rollup podcast, or actually, no, wait, it might have been. No, I think it was someone from the Rollup podcast. Let me check really quick.
all right, then I apologize because they might see this. You're a cool guy, whoever said it. I like you. Don't bully us.
We can cut that out if you don't want the hate.
No, we can keep it. I don't really care. I'm sure it'll be fine. What's next, Danny? More ETH talk? Well, I actually wanted to ask Mark something. Mark, when you say that they need to have not different opcodes, does that mean that Base, for example, couldn't become one if it wanted to because it's clearly done some stuff differently? Like, does it mean that every single native rollup will have to be whatever 12 to 15 TPS low gas, kind of a shit L2 or no?
No, it doesn't mean that, luckily, because you can use your own. You can still have a single sequencer, centralized sequencer, and you can pump the gas that way, or you can use pre-confirmations. Is what I mean to say. Because yeah, you can still you can still pump the gas, get your gig gas per second. But I think Base would still need to change. I think all of the EVM compatible L2s will need to change some of their opcodes, because there's probably like 5 to 7 different ones that they've modified separately and individually. And that's why they had a call a couple of weeks ago to try and get everybody aligned on this new native rollup, to see if people would commit. And again, this is more social signaling than actually financial incentives, but I guess this is what they're doing for now, maybe to try and be credibly neutral, maybe because right now it's a competitive market, and if you start to charge too much as Ethereum, you might just lose your market share to Celestia. So you're still kind of in a rough spot from Ethereum on that sense. I think the ideal solution would be let the Ethereum Foundation create a native rollup themselves. It's literally just the EVM. Ethereum will keep. You can burn all of the fees, the same ETH, right? It's just as secure. Make it a base native. Why don't they just do that? And it gives a floor for other L2s to copy. It's because it's EVM. It's not like any kind of research needs to go into it, and they're already doing the research for native. I think that one is a harder sell, because it might seem like they're rugging the other L2s with this, but what does it matter? Why, if you're going to be credibly neutral and you care about Ethereum and decentralization, why does that matter? At least have a floor for what some of the other L2 should be, or set the example, or just get another revenue source. I don't. However, whichever these narratives works for you to spin it to the community, just adopt it and just do it. Just please make it real native, embedded, enshrined, whatever word you want to use as central bankers to call it. Just use that word, call it that, and shill it and make it, please.
I never see that happening, because I don't think that, like, it took them God knows how many years to implement, to use DeFi strategies, as they like to call it. We're implementing DeFi strategies on Aave. I don't see them ever launching a thing.
I do. I think I agree with Bach. I can't see this like happening really, but the closest like way this could happen is like Linnea, if you know that rollup. It's built by the Consensus folk.
Yeah.
They have like a plan to launch as not as a native rollup, but as a base rollup. They've added that to their roadmap, and it seems like they've made some traction. So maybe that could blow up in the future. Who knows?
They should just do the revenue share model. I think that's the thing that makes the most sense. Don't call
Fuck,
it.
you made such like a disgusted face at
Because
the.
you said it might blow up.
Okay, that's fair.
No, I agree with Bach here. I think there's a lot of actions that could be taken, and like, I don't know, it really just feels like the ETH community finds a way to just sit around and do none of them all at the same time, like just continuously. But they could choose any of these like ideas that have come out, right? Like convince all of them to become based or native rollups, or like do the rev share model or what have you, or like make your own enshrined L2, and like instead we'll sit around and do like social signaling and get none of it done, which is unfortunate.
They have been getting dunked on way too much on Twitter lately, though, and I see a vibe shift come. Like, I think it's too much. You can't be shitting on Vitalik like that. Like, it's kind of like kicking a baby. You don't do that to Vitalik, and so it's like, I do see there being a vibe shift. When you're like, there's a sentiment bottom. I mean, we've been trying to call it for 2 years, I guess. But like, I feel like this has to be it. Like Camino's dunking on Stani on Twitter. I don't know. We'll
So
see.
you're telling me I should buy ETH?
Do not buy ETH, man.
I don't know, the sentiment and the price, I don't know about that one, but I do agree with you that like, I mean, it feels like at the very least they're more and more like EF and Vitalik and other people they've been getting forced basically by just the backlash, like the outrage from the community around like you guys are doing not like pick an action basically, and we're like starting to see that. So I mean, I guess if they can really like take charge and run with something, I mean, that would be great to see. I feel like we were getting that right with, Pectra and other Infusaka upgrades and like, really scaling either the base chain or scaling blob gas. But we'll see if that maybe leads to other things. It sounds like you guys are kind of, on the fence in terms of whether we'll see like significant upticks into, scaling things or like picking a particular direction here is what I'm getting. Hey everyone, we'd like to give a special shout out to the sponsors of today's episode, SKALE. SKALE is built different. Unlike other layer ones, SKALE is offering users a network of gas-free, interoperable EVM L1s where user experience comes first. SKALE operates like the AWS infrastructure model where developers pay for space in the network in SKALE tokens to validators. Essentially, SKALE has chain fees and not gas fees. This allows for free transactions on SKALE and has saved 46 million users over 9 billion in gas fees. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at SKALE Network. Visit the SKALE Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. Follow the link into today's show notes to get started with Ledger today. Maybe we can stop the ETH tirade and jump over to another new launch that has also everything's kind of been getting shit on in this market state outside of Bitcoin, really. But Berachain also recently launched. Their token dropped. The holders of long-time Bera-related NFTs finally made their money. Bach has written some words about Berachain. I'd love to get his thoughts on this one in particular. The biggest thing that we've seen just from the community is like price is down and therefore it's bad. I'm curious, like from your perspective, Bach, like what should we be excited about, or are there things to be excited about for Bera? What should we be looking at if anyone is looking into this ecosystem? It does feel like in these times of sentiment, it's like the time to get on chain, look for new apps, new games to play, and maybe like farm for some airdrops for the future, rather than sit in the cesspool and just shit on stuff.
You kind of set me up for a bullish take, but I don't really have a very good bullish take. I don't know what the fuck. No, I will say a few things. So I think they have a lot of apps that are supposed to launch on the chain. I think Bear is the first chain that we've seen that has gone that. And Danny, I think you're very familiar with this because you wrote that Monad piece. It's like chains have realized now that tech differences are not enough and that they need to onboard as many apps as possible. And I think Berachain is the first to come out, but one of the large iterations of this, where they've onboarded a lot of protocols to launch on the chain. They've done some incubation programs. And Berachain itself also has some native apps that are enshrined. So they have BeraSwap, it's called now. It used to be Bex, and then they have a few other primitives. So on that end, there is stuff to do on the chain. It's not like you're bridging over to like a deserted blockchain. There's stuff to do. On the other hand, I wrote in the it's gonna sound a bit like hindsight bias now because I wrote the report a while ago and then the bear price is down now. But I will say that Berachain raised quite a bit of money. And also they locked away Boyco deposits, pre-deposits. It's like 3.12 bill when it closed. So that's 3 bill in capital in Boyco that is interested in Berachain and Berachain on-chain activities, buying the token or buying other ecosystem tokens. And then they also raised a lot of money, like I said. And on top of that, you got like $2 to $3 million for holding a bear that's smoking weed. So you know what I mean? Like, who's the marginal buyer was my question on the report. And this was specifically, I think, like a launch thing. I think eventually people will step in. I don't think it's like, I don't want to give anything because I think they got kind of unlucky because they launched at a bad time in the market. But on the other hand, like, who's the marginal buyer has been very, very important. And I think it's going to be very important going forward with a lot of L1s because like Berachain didn't even do anything necessarily wrong. They launched at a relatively low valuation, I would say. Given that they raised quite a bit of money, they could have launched a lot higher. I just think they raised too much money and locked up a lot of deposits, so there was really no one coming in to buy. And on top of that, they gave a bunch of people a lot of money for holding NFTs. I think it was kind of expected to sell off. And positive stuff, lots of apps on the chain. Not a lot of them have launched yet. I think you should give it a few months realistically to start farming. I do like infrared. That's like my big one. I think it plays quite well into the proof of liquidity dynamics. It's basically like liquid wrapped Bera and liquid wrapped BGT. I don't want to waste time on this pod explaining proof of liquidity, but basically, like, I like to think of it as convex to curve. It's like infrared to Berachain, and I think it works quite well. That's the one that I've like been looking into. I haven't started farming Berachain for what it's worth. I am supposed to get my airdrop today for yapping about them on Twitter. I hope this spot doesn't go out. No, it's not out today, so I'll be fine. Yeah, if you have any other specific questions, I'd much rather answer those. I realize I've never actually done a report on a pod before.
Darren, Mark, if you guys have questions, I guess I agree with a lot of the points that you said. I think it's unfortunate that they're the first of like this maybe 3-chain cohort that's like very focused around community and having apps day one, and yet they at the same time don't have that many apps day one, I guess is the biggest concern there. And a lot of the, like you mentioned, a lot of the liquidity from the Boyko vaults that maybe could have been actively on the chain is locked up. I guess it's just a different dynamic, right? Like we've seen, the souls, the hyperliquids, it's all around like, trade a bunch of tokens, like lots of velocity, lots of trading activity. And this is very much like ETH, DeFi summer, like get your money in a vault and let it sit there and earn liquidity rewards.
So this I wrote about in the report as well. They're playing last cycle's games this cycle. Like, we've very clearly been, and as you mentioned, it's like trading high speed volumes, and apps make money on fees on those. So I was a bit shocked. Well, I wasn't shocked because I knew that they were going to launch this. So I guess I like was just thinking it doesn't make a lot of sense. Like, I thought we kind of got over that like whole TVL obsession era. To add to that, I want to clarify one thing because some idiot's gonna come and say, "Oh, actually, it's not locked." The boycott deposits will bridge over to Berachain mainnet, but the markets are still locked from 30 to 90 days, so it doesn't matter if it's on Berachain mainnet; it's just locked on Berachain mainnet. 3.1 bill is a lot of money, though, showing that people are clearly interested. I wonder how many of it are existing VCs who are looking to farm more. Also, they didn't really do themselves any favors. Like, investors can stake to earn rewards, and I know it's like the base fee, like 1.6% or something, but still, like, we just had the thing is they just, like, ignoring the mechanics. Proof of liquidity can be cool, whatever. It's novel. That's what people like to say when they don't think something's like actually very good. It's novel. Lots of apps are supposed to launch on the chain, and I genuinely think that it will. I don't know how much quality there will be, but there are a lot of apps launching on the chain. First of all, why haven't they launched? It's been 2.5 years. It's an EVM chain. Okay. More so, the point is, where was I going with this? What was the last thing I said before all this? It was a very good point as well. What was it?
Something about people don't know how proof of liquidity works, but they say it's novel.
Dude, I completely.
Why'd they wait 2 years to launch? Lots of
No,
apps, but they're not there yet. I think they're going to
J-
launch. I think the apps are coming. I don't know. You said a lot of things.
I think Bach is bearish.
It was Boko TVL not being locked 30 to 90 days.
Oh, I forgot it. It's Superman. I don't know. I would just like be kind of careful. Oh, the 1.6% to stakers. We just had this whole thing with Celestial. Not just. We had it like whatever 8 months ago, 9 months ago. Like there's very clearly anti VC sentiment in the markets, and the worst thing is with anti VC sentiment is that people hate it when they're like, "Oh, VCs are dumping on me." Like that's like people's biggest fear for some like, and then you give them this like opportunity to say this while the market's in a downturn. You don't clarify it anywhere, and it's like I don't know. They kind of let it happen to themselves. It's like why let? And then there's reports that the team are selling their airdrops. It's just a mess, dude. Like I hope they can figure it out. Um, but we'll need to see. I would give it like a few months minimum until the boycott deposits are out, or at least the first tranche of like the 30-day ones, as well as like until a few apps are live. And in the meantime, infrared is the only cool one that I realized that I've looked into that I was like, yeah, this probably will work very well. Apart from that, nothing really was like, wow, this is fantastic.
Buck, I didn't like, or I wasn't, maybe you've given this view elsewhere, but I kind of wanted to ask, like, you mentioned like three other, or three chains launching recently, right? I'm curious, like, how do you feel about like the abstract launch relative to this? Because these were both positioned as like more, I guess, like day one having like an ecosystem like type of
Yeah.
chains.
I'm being very unfair to the Berachain guys. It is very hard. Like launching is objective. Like launching a chain is objectively difficult, and then like coordinating that launch with 60 protocols for them to launch is difficult. Um, I don't know. I think like with any chain, like no matter how many protocols you onboard, like you onboard to be day one partners. I think this will happen with Monad and Mega ETH as well, by the way. Like I like all four of these projects. I think are like interesting. I just think it's like you're not reliant on your own timeline. You're reliant on other people's timelines as well. Like I'm not just working on my own chain. I'm also helping 50, 60 other teams trying to get on my chain day one. Inevitably, things will go wrong. I don't think there's much you can do about that. With regard to abstract, I think it was okay. Like it just died out very quickly. It's very difficult. The market's not giving anybody a lot of like second chances as well.
I just did some counting, and Berachain is the 43rd most valuable L1 right now. It is $150 million worth less than Onyx coin, but it's $50 million above eCash. So I'm surprised at how, I don't want to say low, but I'm surprised at how low the valuation is relative to some things that I've maybe never used in my life after years of let's just call it hype behind it.
I will say one thing. I think it's. I don't want to give. This is not financial advice. I do think it's like oversold heavily. I don't think it should be valued that low. I don't know how high it should be valued, but like what is it? I think it's like 500 mil MC market cap, 2.5, 2.6 bill FTV or something. I think that's too low, um, realistically. And I'm also gonna like say one more thing. I think I came off a lot more bearish on this pod than I actually am for Bera. I just think like the report that I wrote was during a bearish time. Um, so like I was focusing on some of the downturns, but I do think that proof of liquidity is relatively interesting, and I'll see. Like, I think a lot of apps could launch there, and if we will have some like DeFi season, with like yield farming and stuff, no matter how like unlikely you might think that is, it could happen. I do think that Berachain will get quite a lot of attention.
Yeah. We do have other chains coming as well, and we'll see. Like, I think the timing is certainly going to matter around the sentiment, right? Like, if let's say if Monad had launched 2 weeks ago, I'm sure people would probably be equally disappointed that the market is down and their new token is down. Nothing is really safe in this environment. I don't know. I'm curious your guys' thoughts there. Like, we talked quite a bit about Bera. We've got other chains coming up. I mean, there's also Story just announced like their IP token. There's tentative rumors about Monad doing their testnet in February, potentially. Maybe I'll comment on that. I want your guys' thoughts. Is I hate this like ongoing meme of like, yeah, we're launching in Q5. Yeah, we're doing the testnet on February 30th. These jokes around like maybe it'll come, maybe it'll happen, maybe it won't.
Yeah, it's
I don't know.
fucking stupid. Why the fuck do they? It's like launch the chain. I'm a prospective consumer. I want to potentially use your chain. Oh, it's in Q5. Good one, bud. Now
You're talking about it, so it's obviously doing something.
Yeah, that's true. I do agree with you. If Monad had launched at the same time, it would have probably. The thing is that I don't want to be the hyperliquid guy, but like hyperliquid people always do this, and it's just becoming a little bit. I was annoyed at myself when I like was messaging in chats. It set this expectation that when a token launches, it has to go up 10x, and the chain can't take any VCs, and they need to do a 35-40% airdrop. And it's just fucking ridiculous. You can't do that ever. So any chain that launches now is going to like, if price dips 10%, people are gonna be like, this is a scam. This is why Hyperliquid is better. Which is kind of good for Hyperliquid if you think about it. It's like Luna 2.0. We're not supposed to talk.
I think Hyperliquid's a good example of like maybe this point we're getting at is that like there's timing and like the path matters for a lot of these things. And if Hyperliquid and the token had dropped in like 2 weeks ago, like it would be hard to say that the chart would have looked the exact same as it did when it launched in a few weeks after the election. Like it was in the right environment to go up. I mean, also, the launch valuation, like they played into that, but if everything was bleeding, it'd be hard to see something like that pull, the same 10x and then pull back from there in a
They
down
launched at
environment.
similar val, I think. Like Hype launched at 2 bill. I think Bera launched at 3 to 4, or 2.5 to 3 or something. It didn't launch that much higher. I don't know. Anyway, Darren, you wanted to say something?
Oh, I was just going to say, like, I almost think about like past L2 launches, like when Arbitrum launched and like Optimism, all those, right? Those were like completely barren ecosystems, more or less. And I kind of think, in a weird way, people were happy with the outcome, at least with the airdrop. I can't, or especially for Arbitrum, I can't really recall like people really being angry with the airdrop outcome for like Arbitrum. They bootstrapped like users in a organic way, so to speak. Like they had like nothing, and people came and built stuff, and then got like a big airdrop for it. I'm like butchering this really, but like I wonder how much is like being overcomplicated, if that makes any sense. Like, are we overcomplicating this?
I think Arbitrum also launched at a different time where there weren't as many chains and assets, and Ethereum was king. And then I remember they had whitelisted it for certain like DeFi protocols to launch, and they went through that whole period and made sure everything was running properly. So by the time it actually went from mainnet, devnet, testnet to actual mainnet, then things were a lot more smooth then. But I mean, that's just for the launch. For the token price, it hasn't been performing well at all. And I think that's mostly due to dilution. Because if you look at 2024, Arbitrum's market cap, and it's the same true for many of the other L2s like Optimism and many of the others, their market caps are up, believe it or not, but the token price is down. And that just shows you how much dilution plays into your returns in like a longer time period, which is something you need to watch out for all the chains, even like the new ones like Berachain or whatever else. I'm not familiar with their tokenomics, but I assume some dilution will be coming in a year or so.
I mean, I think if I recall, Arbitrum actually like going into that kind of hype cycle of like late 23, early 2024, when the market was, Bitcoin was going up, lots of things were going up. I think ARB objectively performed fairly well as a token. I think Mark's point, like it was a different time. The token basically launched during the depths of the bear market. I mean, early, what would that have been, like March of 23? Bitcoin was like kind of starting to go back up at that point, but it was probably in the 20s, 20,000s at that time. So just totally different than like launching at some maybe even higher valuation when things are not like Bitcoin's now at $100,000 a coin, and then the market turns sideways and alts go down for half a month.
Yeah, it was also
the
the
pathway
second
matters basically. Path
Yeah.
matters for a lot of these things.
Yeah, agreed. It's gonna be tough. I think we'll see quite a few people shift away from. God, I feel like every cycle we say this, but like surely people will now start building apps, right? Like if the L1 valuation gets compressed, maybe.
What do you define as apps here? Because I could see that like two things. Like one, I could see that like happening in this weird way where like an L1 launches, but then they build out like a ton of apps themselves. Like they launch their own decks, they have like
Berachain.
MEV infrastructure to go with it, like all that, but it's like just the team, right? Or like, they recruit people, etc., right?
That's Berachain. That's what they did.
It's also Sui though, right?
Yeah, it's also Sui.
They're supporting a lot of the apps.
But also on the app thing, we're pretty, last month, January, I think REV for all the chains was 830 million. Application revenue was around 800 million.
Yeah.
So it's REV and revenue, obviously two different metrics entirely, but it's getting there. I feel like it's getting to where we all wanted to get to, at least us in research.
Yeah.
To be
Ryan
fair,
Connor's gonna kill you for sorry, Danny. I wanted to make a Ryan Connor joke. Can I say?
No, go for it. I'll go
Ryan
after you.
Connor's gonna kill you for saying REV is not revenue.
I was gonna say there are plenty of apps like to Mark's point. There's plenty of apps that make money. I think a lot of these apps that are like people don't want to talk about them, right? It's like Photon, it's Bullex, it's all these like meme coin trading apps, and they're printing a ton of revenue. And I think people look at that and they're like, well, maybe somebody will build apps. We're hoping for someone to like start building apps and not chains, but it's like there are apps and people are using them. It's just not the ones that you want to talk about, I guess.
Well, yeah, it's people like moralizing over like meme coin revenues, and it's also just like I almost want to say like there's this hate between like true altcoins and like meme coins. Like I think Bach brought this up before. Like there's a chart that's going around where it's like meme coins like meme coin growth or something, and then it's like how altcoins have performed, and like sure, like you can view it like that, or you can view it as though people think that that there's more opportunity in meme coins than like whatever altcoin that had like your advertising that has fundamentals, right? I don't know.
Are you promoting meme coins as an American citizen?
No, absolutely not. And besides, they're collectibles.
I don't know. I don't want to talk about the meme coin thing because I yelled at Danny and Danny yelled back at me last week about it, and so Ryan. But I wanted to touch on something you said, Darren. No, something you said, Danny. Yeah, these apps make a lot of money because they take 1% fees on volume, and eventually that's going to get compressed down. But like until then, if you're an app developer, it makes sense to like build out something gamified. People say like, oh, we don't have any Ponzified stuff anymore. Like, we do, or you just haven't built like anything that we had Ponzified. You can build out the same thing now, and take 1% on volume, which is fantastic. Like you can make a lot of money. Apparently, 800 million app revenue, according to Mark. So, app REV, sorry, not revenue.
Yeah, totally agree. Like, I mean, these guys are absolutely printing. I think Photon itself is doing like 200 million in volume a day. So they're just like printing $2 million in revenue. I mean, whatever their salaries are, but that's an absurd amount of money. That probably does get compressed. It probably gets compressed at the same time that like activity and usage would likely also go up, or at least competition over those things would increase. It's surprising that, I mean, we've talked about this before as well, but like it's surprising that those haven't come down with just how many of them are competing for that set of users in that trading volume. But I don't know. We fight about meme coin and meme coin trading. The whole industry is doing it right now. It's kind of like the hot topic, pump fund ruin crypto. Maybe keep it lighthearted. I don't know. If any person here were to list a meme coin and then crash out live on Twitter, who do we think it would be? I'm gonna have to vote on Bach here. He really he seems like most likely to be our crash out resident.
No, Bach 100%. It's not even a debate. I wanna no other answers I've sected.
What the hell does that mean? What does this mean? What am I gonna do?
Yeah,
I'm
it's
gonna
probably Bach.
post a meme coin and then crash out. You think Are you trying to say I'm gonna go? I don't want to say it. I
He's
don't
gonna
know.
go
Bach is
pure
pretending like
crime mode.
yeah, he's pretending like he hasn't talked about this before.
I have talked about it. I've considered never doing it, but increasingly, dollar Bach is becoming more and more a possibility.
Everyone is seeing how successful Portnoy has been on Twitter lately, and you've even if you're not going to do it, and you know in your heart you would never do it, you've thought about it. It's come across your mind, and I think a lot of people it's run across their mind. But NFA, I wouldn't really recommend doing that publicly, and letting that live on the internet forever. To have officials go and comb through the records of how you made money pump and dumping a coin.
I will say one thing on Solana. SolScan has now only showing the past 200,000 transactions or so. So, and in fact, nobody can even read Solana block explorers anyway. So I think that's part of I think 10 to 15% of the reason why people launch meme coins on Solana is because crime isn't legal, but it's very hard to prove because of how the block explorers work. But what I'm saying is, Danny, if you actually wanted to launch coin, you can just do it, and people wouldn't be able to catch you. So jail Danny token out this week, next week.
We're going to delay the launch. I'm a little too worried. Even if 99.99% of people cannot read SolScan, I know that Zach is out there. He's looking on chain. He's finding people and reporting them. So we're gonna hang on until maybe that threat goes away. All right. Appreciate you guys coming on today. This was a good chat. We will see you all next time.